you will be able to buy a house with digital commodities like XRP. I'm Camila Stevenson, and around here we talk wealth. And I want to talk about how there is a very specific list of assets that the traditional financial system has recognized as real wealth for decades. And that list includes cash, stocks, bonds, real estate, and gold. These are the assets you could use to secure a home loan, the assets you could hold in a retirement account, the assets that when you walked into a bank and said, I have this, the bank nodded and said, yes, that counts. For years, crypto has sat outside of that list. It was speculative, it was volatile. It was something you owned despite the system, not because of it. The bank did not do the nod. The mortgage lender did not accept it. The retirement account did not allow it. And recently, two things happened that changed that permanently. And I want to make sure you understand not just what happened, but what it really means for the value of what you are holding, because most people read the headlines and they move on without understanding the depth of what just shifted. Now, before we begin, I want you to drop in the comments, did you know that crypto just got added to the list of assets that Fannie Mae accepts as legitimate collateral for a home loan? Let me know yes or no, because most people have no idea what that really means. And by the end of this video, you will. Go ahead and like the video, subscribe if you have not already, and know that this is not financial advice for you to go and invest based off of what I say. That is your own decision. So manage your own expectations and know that I am not your financial advisor. Now, Fannie Mae. I want to talk about this because most people have never had Fannie Mae explain clearly, and without understanding what it actually is, the announcement means almost nothing. So Fannie Mae is a government-sponsored enterprise, a company created and backed by the federal government whose entire job is to purchase mortgages from lenders and package them for sale to investors. When a bank gives you a home loan, it typically does not hold that loan forever. It sells it to Fannie Mae. This frees up capital so banks can keep making loans. And because Fannie Mae is government backed, those mortgage packages are treated as some of the safest investments in the world. Here's why that structure matters for what just happened. When Fannie Mae updates its underwriting guidelines, meaning the rules about what qualifies for a Fannie Mae-backed loan, it does not just affect one lender or one product. It restructures the rules for the entire American mortgage market all at once, because virtually every lender that wants to sell loans to Fannie Mae, which is most of them, has to follow those guidelines. When Fannie Mae says a new type of asset qualifies as collateral, that decision ripples through the entire housing finance system overnight. So what assets has Fannie Mae historically accepted as legitimate collateral for a mortgage? Well, cash and cash equivalents, stocks and bonds in brokerage accounts, retirement account balances, and real estate equity. These are the assets that have been recognized as real enough to back a home loan for decades. The system looked at these assets and said, yes, these are assets that count as wealth that we can build a mortgage around. So recently, Fannie Mae officially added crypto to that list for the first time in history. So through a partnership between Better Home and Finance and Coinbase, a borrower can now pledge Bitcoin or USDC as collateral for a second loan that covers their down payment while simultaneously taking out a standard 30-year Fannie Mae conforming mortgage on the property. Both loans are held by the same lender. The buyer makes one combined monthly payment. The crypto sits in institutional custody for the life of the loan and is returned in full once it's repaid. Now, here are three details that make this genuinely significant beyond what we probably have seen or read at this point. First, the crypto keeps appreciating while it's pledged. So the borrower doesn't have to sell it, doesn't have to liquidate it, does not trigger a taxable event. Their position stays intact and continues to grow throughout the entire mortgage term. So they assessed the liquidity they needed without giving up the asset that generated it. Now, number two, there are no margin calls. If Bitcoin drops in value, the mortgage term does not change. The borrower does not receive a call asking them to post additional collateral. The only trigger for liquidation is, I believe, 60 days of missed payments. So that's the exact same standard that applies to every other Fannie Mae conforming mortgage in America. The volatility of the underlying crypto asset is completely isolated from the mortgage obligation. Number three, Fannie Mae will purchase these loans exactly like any other conforming mortgage, which means this is not a niche product from a fringe lender operating outside the system. This is a mainstream government-backed financial product that is going to be replicated and expanded across the lending industry as other lenders follow Fannie Mae's lead. Now, here is the concept that I really want you to understand, because this is where the significance goes even deeper than most people are willing to take it. The mechanisms of borrowing against an appreciating asset without selling it is not new. It is actually one of the oldest wealth building tools in existence. Wealth families have used it with real estate for generations. They buy a property, it appreciates. They borrow against the equity. They use the borrowed money to buy another property, and the original property keeps appreciating. They never sold it. They just used it as the foundation to build the next layer. That mechanism, your asset appreciating while you simultaneously access its value as collateral, has been the primary engine of generational wealth building in real estate for decades. The financial system recognized real estate as legitimate enough to build that mechanism around. And for years, crypto holders watched that happen, knowing their assets were appreciating just as significantly, but could not access the same tool because the system did not recognize what they held as real wealth. Well, this system just said yes to that. So crypto is now on the list, not an experiment, not a pilot program, but as a government-backed conforming mortgage product that Fannie Mae will purchase like any other standard loan. So the financial system just handed crypto holders the same wealth building mechanism that has been used to build generational wealth in traditional assets for decades. Now, there is another thing that happened recently that is even bigger in terms of the scale of capital that it can unlock. The White House just gave the green light for a proposal that would open 401k retirement accounts to crypto for the first time. It is not finalized yet, but the direction is locked, and the implications of what comes next are almost impossible to overstate. So I want to talk about the 401k approval and what 13.9 trillion entering this space would mean for you and I as we hold our digital assets. First, let me make sure you understand what a 401k really is before we get into it, and why this number is so significant, because the size of this opportunity only lands if you understand what we're really talking about. A 401k is an employer-sponsored retirement account where contributions go in before taxes are taken out and grow tax deferred until you withdraw them in retirement. The majority of working Americans have one, and most people have never even looked at what their 401k is really invested in. So money goes in from every paycheck and it sits in whatever default index fund their employer selected. They usually know the balance, but they rarely know the details of this account. And before recent, none of that money had a legal pathway into crypto. So the White House just cleared a Department of Labor proposal that would open 401k accounts to crypto exposure for the first time in American history. Now, the DOL still needs to publish it for public comment before it finalizes. So it's not done yet again, but the direction is where it needs to go. And the posture of the federal government towards crypto in retirement accounts has completely changed directions, just like that. The previous administration specifically warned fiduciaries to use extreme caution around digital assets in retirement plans. And so you haven't seen this open door to be able to put your retirement into crypto in that way. And now that guidance has been completely reversed. So the federal government is now actively clearing the path for crypto to enter the most widely held retirement vehicle in America. Now, here's what it looks like for the number, which is where I came up with that number that I just stated. The total assets sitting in 401k plans across America right now, not the total retirement market, but just 401ks, is approximately 12 to 14 trillion. That's a lot of money. So if you even have 1% of that capital finding its pathway into digital assets, then that is 120 to 140 billion in new demand entering into this space. If 2% flows in, that's 240 to 280 billion. And those numbers only account for 401ks. The total US retirement market, including IRAs and pension funds, sits at approximately 48 trillion. If 401ks prove the model works, the broader retirement market could follow, right? Now, let's connect that to XRP specifically, for example, because this is where the scale becomes genuinely difficult to fully process. XRP's current total market capitalization sits in the low tens of billions. The inflow from even a fraction of a percentage point of 401k assets moving into XRP will represent demand at a scale that dwarfs anything the retail accumulation story has ever produced. This is not about individual investors buying on exchanges. This is about an entirely new category of capital, meaning retirement savings that has never had legal access to this asset class. And it's now gaining that access through the most widely held investment vehicle in America. And here's the supply dynamic that most people are not thinking about when they hear this news. When crypto sits inside a 401k, it does not trade actively. It gets allocated and held long term because that's how retirement accounts work. People are not day trading their 401k. They are setting an allocation and letting it compound over years and decades, which means 401k capital flowing into XRP is not just demand. It is demand that removes supply from circulation from extended periods. Assets held in retirement accounts do not hit the exchanges. They sit. And when supply sits, while new demand keeps arriving, the math on price discovery changes significantly. Now, bring both stories together because I want you to see what happened this week as one complete picture rather than two separate headlines, right? You got Fannie Mae accepting crypto as legitimate collateral and 401ks gaining a pathway to crypto, and they are not independent events. They are two chapters of the same story. The traditional financial system is officially reclassifying digital assets from speculative instruments to legitimate wealth. The same reclassification that gold went through, the same reclassification that stocks went through. And this is the moment when the system stops treating an asset as something people gamble on and starts treating it as something people build their financial lives around. That reclassification doesn't just affect demand, it affects how every institution, every lender, every retirement fund manager, and every financial advisor in America thinks about what crypto is and where it belongs in a portfolio, right? And so once that reclassification happens, it does not reverse. The door just opened in both directions all at once. Crypto can now secure your home and fund your retirement through the same traditional financial infrastructure that has been the backbone of America wealth building for generations. Now, here's something worth thinking about carefully, given everything that we just covered. The 401k pathway is not finalized yet. When it does finalize, it will be a pre-tax deferred account, meaning you do pay taxes when you withdraw. So it's not tax-free, it is deferred. Now, the Roth IRA through iTrust Capital, which is what I use, is available right now today. And the gains are completely tax-free, not deferred until later, but free. And so while everyone is waiting on the 401k approvals to come through, the window to establish your cost basis inside a tax-free structure at current prices is open right now. And remember, you have until April the 15th to fund your 2025 Roth IRA. All right. I don't know when you're watching this, but if it is before April 15th, then you still have a window to fund your last year Roth IRA. So I just want you to know that because a lot of people are not aware of this. And this means that you can establish last year's cost basis inside the tax-free account right now at, again, the current prices before that window closes permanently. And then you'll have to now fund 2026. And so make sure you know that I personally have a lot of digital commodities inside of that account. And I also hold gold and silver in the same account alongside the digital assets. So I have two asset classes that just got further legitimized by everything that we talked about today inside of one tax advantage structure. Now, the link is in the description. There is a $100 funding bonus when you do fund your account. They also just rolled out RLUSD, and they do have a premium custody account also, where you can already stake your Solana and your ETH and get rewards on top of that. And so make sure, again, that you check out the link in the description and get that $100 funding bonus, and then you can buy more assets with that. Also, if you would like a clear personal plan built around what you now understand, my community is built for that level of accountability to get you moving in the right direction, give you a game plan, structure your finances, make sure you're protecting yourself with taxes, grow your mindset. And we keep updates in the market. I'm live with my members every single week, and I'm coaching you every step of the way in my community. And then also, if you want a more personalized experience, that is what my clarity calls are for. The links are in the description for that. I want you to like the video and subscribe and share this with someone who is still waiting for the moment that crypto gets taken seriously by the traditional financial system. Tell them they missed it and it already happened. And as always, I want you to stay wise, stay wealthy, and I'll see you in the next video.